Hey folks, today let's dive into a hot topic that's been shaking up the financial world. Why did the dollar fall in markets worldwide? If you've been keeping an eye on the news, you might have noticed some dramatic drops in stock markets around the globe. But what's really driving this? Let's break it down. First off, Wall Street experienced a massive wave of fear. The Dow Jones Industrial Average dropped by over 1,000 points, and the Nasdaq, which is heavy on tech stocks, fell even harder by 3.7%. This wasn't just an isolated incident. Major markets across Asia and Europe also faced substantial losses. So what's causing all this turbulence? A big factor here is the unexpected rise in the US unemployment rate. It climbed to 4.3%, which may not seem catastrophic on its own, but this sudden jump sparked worries about a potential recession. Even though the economy saw strong growth last quarter, economists at Goldman Sachs have increased the probability of a recession within the next year to 1 in 4. That's pretty significant. Next up, let's talk about the Federal Reserve. The stock market had a record-breaking performance this year, driven by declining inflation and the expectation that the Fed would shift from aggressive interest rate hikes to cuts. But last week, the Fed decided to hold interest rates steady. This decision has raised concerns. Many see the Fed's patient approach as a potential mistake, especially given its history of mistimed rate adjustments. The Fed has been known to be slow to react, like in 2022 when it was late to respond to rising inflation. Some economists argue that the Fed should have cut rates earlier to support the labor market. With inflation cooling and unemployment rising, there's a growing concern that the Fed's delayed actions might lead to mass layoffs. Analysts are now predicting rate cuts in the upcoming Fed meetings, but some argue for an emergency rate cut to avoid a severe economic downturn. And then there's the tech sector. Artificial intelligence investments have been a massive driver of stock market gains recently. But AI is still in its early stages, and the profits from these investments haven't materialized yet. This uncertainty led investors to sell off shares in major tech companies like Apple, Nvidia, and Microsoft. Even Warren Buffett sold half of Berkshire Hathaway's stake in Apple, furthering the unease in the tech sector. As tech giants like these constitute a significant portion of the S&P 500's value, their decline has a ripple effect across the market. Investors are fleeing from riskier assets, driving down treasury yields. This shift towards safer investments like bonds might impact retirement accounts positively for those nearing retirement, but it could also lead to lower interest rates for savings accounts. So, how long will this fear last? That's the big question. Investors are cautiously waiting to see when it'll be safe to buy back in. If you want to stay updated on this roller coaster of financial news, don't forget to hit that subscribe button. Thanks for watching, and see you next time.